All right. Welcome back, you guys, to another YouTube video. Today, we're going to be talking about how to spot reversals versus continuations. We'll start off with reversals, and then we will go into continuations. If you guys want to join the private mentorship where we run live trading, we have weekly giveaways, we have a bunch of community stuff. Go ahead and join at discord.gg/leverage. You guys can find my socials up here. But without further ado, let's go ahead and get right into it. So, how to spot reversals versus continuations. A few things to mention when you guys are noticing your reversals versus continuations. I do recommend you write these down as well. Is going to be some quick notes that I have here, which will be the first one, which is market is 80% continuation and 20% reversal. What this means is you will always assume continuation until disproven. We will go over a little bit more of my personal disproval theory in later in this video, but understand that the market is 80% continuation and 20% reversal. So always assume continuation until you are disproved and you can see the reversal is clear. Now, this goes hand in hand with you having structure first always. So make sure that is always very important that you are focusing on your structure. Your structure is going to be the biggest show of hand that will let you know when price is going to either reverse or continue in a given direction. Now, the best way to do this is going to be starting with your higher time frames. So your higher time frames will show your direction. Your lower time frames will show your confirmation. So your higher time frames will, if it is bearish, will show that it is bearish. LTFs will show the confirmation of that bearish structure. So we'll talk about how to get into trades as far as continuation and reversals go later towards the end of the video. But definitely write these down as they are very important to your guys' system and understanding how to catch those reversals versus continuations. All right, starting off with continuation here. Continuation will be the most important one that you need to understand every single time you look to take a trade. Now, as far as continuation goes, always follow your structure. So, understanding your higher highs, your higher lows, your lower highs, and your lower lows. Again, notice your strong highs, your strong lows. We'll talk a little bit more about what that means in just a second. But always, as you are following your structure, when you are looking for continuation as a continuation or institutional trader, you want to catch the higher low in a bullish scenario, and you want to catch the lower high in a bearish scenario. So we're looking for lower highs and we're looking at catching the higher lows for a bullish scenario. So always focus on where your next higher low is going to be made, and always focus on where your next lower high is going to be made for continuation. Now, how can you spot when that continuation is going to occur? All right, so that means you're going to be looking for your higher lows. Now, the show of the purple structure right here is going to be your lower time frame bias. The higher time frame is going to be this red structure right here. So if the red structure is bullish and we make a push up, let's say this is the H4 or the 4-hour candle chart, we make a push up and now we start to make a push down. The lower time frames as we are pushing down is going to show bearish structure. So in order to confirm that as a higher low, let's say this is the 15-minute chart in this case, we use the 4-hour and then the hourly as well and the 15-minute to be able to show when we get that actual break of structure. That break of structure does occur when we have lower highs, lower lows, lower high, lower low, and then we get that break of structure to the upside. Now we have a higher high that is formed, and we start to get that continuation overall on the higher time frame scale. So now the lower time frames and the higher time frames are aligned with each other. That's how you will always look for continuation. And if it is a bearish scenario, it's going to be the same exact thing. So lower highs or higher high, higher low, break of structure to the downside. Now we have a lower high and we can look to catch it into the lower low and so on. Now let's talk about a reversal. All right, as far as reversals go, again, this will be 20% of the market. So understanding reversals is going to be very simple, as we can just look at our previous strong lows or strong highs and look for when that break of structure occurs. Now, we also need to look for a continuation of that break of structure to be able to understand when price is actually reversed. Now, an example of that is, again, going back, looking at our higher lows and higher highs, you can see how structure is forming as price is moving up. Once it makes that push up and then we get that strong low that is broken to the downside, it is very important that we get an imbalance. So we get a large push in price on that break of structure. And then once price comes up, creates that lower high, we can confirm it with our lower time frames, exactly what we were just talking about as far as continuations go, to be able to see when that lower high is formed. Then once it is formed and we get another lower low, now we have that full show of hand of a reversal. We can look for price to be able to show that, come back into that area, catch that trade, and then take the full continuation to the downside. Now, we'll also talk about these with candlestick examples in just 1 second, but let's also show the in-depth right here. So again, kind of understanding the same exact thing where we're looking for that reversal. First, we look for that break of structure on the higher time frames. Once that low is formed, we can use this structure that we can see right here to be able to form that actual continuation of the trade. Now, as far as the lower time frames go, again, we'll have the same exact thing where price is bearish, 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 and then it starts to show bullishness on this pullback right here. That's going to be this move right here. So once it starts to show that bullishness on the lower time frames, all we have to do is wait again for the break of structure to the downside to then confirm our area of supply for a reversal, and then we can look for that area of supply to catch that trade and take it to the downside. Always look for that liquidity raid, break of structure, and then confirmation on the lower time frames. So let's write that down. Again, liquidity raid, break of structure, and confirmation. This can be seen as an AMD model or something similar, but the whole point of me saying this is for you guys to understand the behavior of how the market forms and the behavior of how these candles form. If we look for that liquidity raid, if we look for that break of structure, as far as our structural confirmation goes, and then the confirmation of that on the lower time frames, we will be able to catch those reversals as well as those continuations. It is all the same type of behavior, same thing over and over again. You guys will notice this if you just watch the candlesticks. So definitely understand that it's the same behavior over the same model or the same look over and over again. Mentafx had a great saying of this. It's talking about snowflakes, right? All snowflakes are snowflakes. You understand them to be snowflakes, but they don't look the same. But the behavior of how a snowflake forms is the same. So we understand that to the charts, the behavior of how the liquidity rate, the break of structure, and the confirmation can show our reversals and continuations versus the opposite. Now let's get into some candlestick examples. All right, a great example of this was literally what just happened on US 30, right? We can talk about our higher time frame to lower time frame structure and to understand when the reversal or continuation occurred. First, we're going to talk about continuations and then we will get into reversals. So, continuations, higher time frame structure, we are on our 4-hour chart. Understand that we are looking for breaks of structures to the upside, looking for us to hold previous strong lows and create new highs. As price is moving to the upside, we get higher highs, we get higher lows. Price is still holding those previous lows that caused new highs. So as long as it shows its liquidity rate and then another break of structure to the upside, price will continue. So higher low, higher high, we're going up, higher low, lower high, lower low. We get a break of structure to the upside right when we get this push right here. And then we have our area of demand that is formed on that candle before candle. So we look for price to continue off of those areas, and that's exactly what it does. Again, as it comes back into that structure point again, lower highs, lower lows, wait for our break of structure. Here comes our break of structure to the upside, candle before candle that created that, otherwise known as the flow block. There we go. There's the push right into that area and then continuation to the upside. Now, when do we get that reversal and when do we get that show of hand? Let's again focus on our structure here. Higher low, higher high, higher low, higher high. Where do we get that break of structure with an imbalance? We get price coming up, making a low, a lower high, and then we get a break of structure to the downside. Remember that higher low that caused a new high right here? Liquidity raid, break of structure to the downside. Now we look for again lower highs, lower lows, lower high, lower low. Look for your next area of supply, lower high, catch that lower high, and then you can take that full reversal into previous areas of demand. That's exactly what we did actually last week. You guys can see those trades that were taken and the entries that we took them out at. So beautiful, beautiful continuation as far as that goes on US 30. So we got the continuation and then our reversal came from that area when we got that break of structure to the downside. Now let me show you guys my lower time frames coming into this area as well, so you can understand when the reversal occurred and how to be able to catch that reversal on a lower time frame scale, because that's exactly what we did. So we got that break of structure to the downside on H4. We got another break to the downside right here, and then coming into our continuation day, which was going to be Thursday, and then Friday, which was our distribution day, we had Thursday break structure to the downside right here, and then we had a candle before candle that was formed. This is our area of supply, also known as the flow block. So now let's go to our lower time frames, our 15-minute chart. And we can understand here that price is still showing that same exact behavior coming into that area of supply. So again, this was our 4-hour range of supply. Price created a low. It is coming up to create the lower high. Notice the structure as it is coming up as well. Again, same exact thing, higher highs and higher lows. And then price comes up, creates a lower high, and then a lower low. That's where we were able to catch that trade. Now, even from the 15-minute to the 5-minute chart, we can see the same exact thing. It comes up into an area of imbalance, break structure to the downside right here on the M5, and then we were able to catch that entry, putting our stops above this high, and we got that full continuation on US 30 all the way into those lows. So you're able to catch that higher time frame trade from the higher time frames to the lower time frames, just like so. If you guys did want more information on this or did find this valuable, please feel free to like and subscribe. This is what I have for you now. We have a bunch of EDU on the page as far as our YouTube goes, so definitely go check those out. Focus on your market structure, and then I have one specifically on those supply and demand areas as well as Wyckoff as well. All of these things are things that I use to be able to get into trades and find my overall status. All right. Thank you guys for watching. If you did make it to the end of the video, you have the patience that it takes to succeed. Many traders can't even sit through a trade. So if you can't sit through a freaking YouTube video, how are you going to be able to sit through a trade, man? But thank you guys very much for joining this. Like and subscribe for more. Definitely go on the page. We have a bunch of strategy series. I have a bunch of stuff where I talk about my trades, how I take my trades. And again, if you guys want a little bit more information, join the private mentorship. It is a paid mentorship at discord.gg/leverage. I will have a website up soon for you guys as well. So thank you guys for watching. Have a great rest of your day and or night, and I will catch you guys in the next one. Peace out.